All right, yo, welcome to the Living in Portland Real Agent Now team. That's right. If this is your first time to this channel, make sure you subscribe. That's right. Tap the little bell, hit that dinger, so that way you are notified every time we do a new video. We are absolutely loving the phone calls, the emails, the texts, everything we get from people just like you reaching out to learn more about living in Portland. I feel like I'm yelling today.
No, you're a little. That's good. Let's keep it rolling. You know what caught my attention there is I don't think I've ever heard anyone do a call to action to hit that little dinger. Everything we usually call that a bell, but yeah, take a minute.
Anyway,
That was a super
I am
good.
here. I am your girl, Listy. That's right. I am your real estate agent here in the Pacific Northwest, and I'm with my bestie, Addie Net.
And we have a special guest today, Mr. Tyler Ross.
Hello.
So just to kind of put a little structure to that, today is going to be a good episode, guys. So one of the biggest topics right now in real estate is failed transaction. So what that is really is you get into contract and then you terminate. It is no longer a deal.
Are you saying that Tyler's failing real estate transactions for us? Is that
No.
what you're telling
Just a
us?
complete
Because
failure.
you just introduced Tyler. Nobody knows what Tyler does, and then you instantly go to failing. So I'm
It's
just
called
like, come on
marketing.
now.
I'm trying to string viewers along to keep watching. I don't want to give it all
He's trying to
away.
get them hooked.
Right?
Get
Yeah, I'm
them
trying to
hooked.
set the hook.
You
I
only
put
got
the
a
bait
minute in.
and I put it in the ocean, and you're trying to pull it up on the boat. We got to give people a chance to get hooked in.
All right.
So one of the biggest things, like we've all done this, right? You're on Redfin or Zillow, you see, oh, the property details, it's been back on market, in contract, back on market. And you just assume
The foundation's cracked.
there's some nonsense.
But really,
this house.
There's much more to it. So in today's episode, we're going to chat through different scenarios. And one of the pieces of why might be insurance, which to bring it back to Mr. Ross here, he is our local go-to insurance agent here in the Pacific Northwest. And we've utilized Tyler on many, many deals, Heather and I.
Oh, yeah. He's our
So
go-to.
this isn't just someone we found on the side of the road and paid him
Today,
$5 to
right?
show up.
I know. So obviously, we both use Tyler personally. What I love is you actually saved me several $100s.
Yes.
And I mean, you saved my parents like over $1,000.
Oh, yeah.
It was crazy. So I do love that about
I
it.
would say insurance is one of the most overlooked aspects of real estate, and finally now it's really come to light on.
Insurance has become one of my favorite topics.
No way.
I know, because
She gets all geeked up. She
I
calls
do
me
get
all the
geeked
time.
out. I do get geeked out. And poor Tyler, you guys, he is an amazing guy, great insurance agent, husband, father. I also
wow.
have to bring in
Yeah,
what I
I
love
know,
also
always,
about
yeah.
him is he's a local high school baseball coach, and I'm a crazy baseball mama.
Yeah.
So I drive him crazy with all of our baseball talk. But I think that's important to show that you're also working and helping our community out and the youth. You know what I mean? I
Yeah,
think that's important too. So you're just a good all-around guy, and you
I appreciate
want
that.
what's best for your, people that come to you for insurance. You're watching out for their best interest. And that's something that I think is really, really important to point
Yeah.
out, because you're going to just
Oh, yeah.
spell it out in different ways.
Yeah.
Where did you want to talk more? Because I just started getting excited about
No, you're good.
insurance.
I'm taking
She's
some,
showing you
I'm
she's
taking
excited.
some notes.
So
We're going to get into it. We're going to
you
get in.
start, because I have so many questions about insurance that I want to talk about.
You've got, I just really, how about we start off with a story? Do you like that? Confirm yes or no?
Yeah, but
No.
can I just say something that I learned?
She couldn't even wait 5 seconds.
No.
Can I just say, okay, I felt really stupid as a real estate agent, because I learned something this year that I had no clue could affect my insurance rate.
What?
What do you tell all of our people to treat like a sweet little baby Jesus?
Their credit.
Your credit. I had no idea that your credit score could affect your home insurance. I felt like a goober.
Okay. I love that. We'll take that for a
now.
transition. So, guys, I really want to just lay it down,
Yeah.
the importance, because you might be considering turning this episode off. I encourage you not to.
Okay.
Here's the
please don't.
reason
Stop
why.
talking.
Because when it comes, me as the lender, when it comes to getting you pre-approved, what comes into account is the monthly payment relative to your income and your other non-mortgage liabilities. So that equation dictates what you can get approved for, what your budget is. Can I buy a $500,000 home? Can I buy $1 million home, right? Now, when insurance adjusts, gets more expensive, your buying power reduces as the buyer, meaning you can't buy as much of a home. To give a little bit of perspective, about $50 increase a month of premium can reduce your buying power anywhere from $10,000 to $20,000. So in some instances, people are getting into contract without really having realistic insurance premiums. They get an offer accepted after all this work from the agent, the buyer, the emotional steps it takes to want to buy a home, put in an offer, it's accepted. And then the insurance premium might be more expensive and you no longer qualify for that home. This is serious, not trying to scare you, but today we're going to give Tyler an opportunity to explain why in the last 12, 24 months, we have seen an unprecedented increase in insurance premiums. And this isn't just real estate, it's your auto loans or your auto insurance and different premiums. So why don't we let Tyler just kind of explain right off the jump, why have we seen such an increase and what are some of the factors that could be kind of adjusting the premiums from a case-to-case basis?
Yeah. So before I get into that, I have a little, not a quick story, take it with a grain of salt. So my father-in-law last night, he's helping an agency in Florida, and I always thought, man, it's getting pretty expensive here in Oregon for homeowners insurance. And he asked me, I just did this home quote for this family in Florida. It's a $1.1 million home. How much do you think it costs for their home for a homeowner's policy? And I was like, $7,900, trying to just be crazy.
Sure.
$27,000. So take that
per year.
Yeah, per year. So, and that's the thing I always tell people. It's like, yes, it's bad here, but it's so much worse in states like California, Louisiana, and Florida.
And why is that? Why are you seeing different?
Yeah, so you see inflation costs. Things cost a lot more. A good example I could tell people, and this is on the auto side, but it can relate to the home portion, is that when you get into an accident and you go to a body shop, a lot of insurance companies kind of budget out, okay, I'm going to have to probably pay $150 an hour to the body shop to get the car fixed.
Right.
If you go to majority or average body shop now, they could fluctuate what they charge. So sometimes they'll charge $350 an hour. Sometimes they'll charge $450 an hour. A lot of times insurance companies are not going to tell the client, well, you can't go there because they charge X amount. So they end up having to pay that. But as small as that is, as far as an extra $300 every hour for that's across the United States. And so that's happening consistently. So what we're seeing is just things cost a lot more. People are putting in a lot of small claims. It's hard. Insurance companies are trying to play catch up. During COVID, they were giving out a lot of money to help people out with their insurance premiums, especially on the auto portions. Well, what's happening is in 2020, they had the same amount of accidents that they had in 2004, which you're thinking that was a long ways away, but they weren't giving free premiums back in 2004. And so they're just trying to play catch up, and it's hard just because people are still putting constant claims in all the time. And it's just people are, in terms of homes, they're getting into homes, they're buying homes that need new roofs or they need new plumbing, they need new electrical. A lot of these homeowners get in that house with nothing to be able to, fix those things. And what happens is they have a loss, and all of a sudden, a $2,500 claim here and there, that all gets racked up across the United States, and then it's expensive. And
But
so
I would like to say it does not cost $27,000 to insure a home
no,
here in Oregon.
no, it does not. No, it does not. No, it's not. No.
Yeah, but that's crazy.
I would say
Yeah.
the average. I would say before, even during COVID, but prior to COVID and then into COVID, the average homeowner rate in Oregon, I would say, was anywhere between, could be $700 to $900 for the year. Right. Could be a little bit lower. But now you're looking at like the $1,100, $1,200 range in Oregon.
30 to 40% increase.
Yeah. And so, and that's happening if you buy a new home, if you own a home. So if you're watching this and you're like, man, my mortgage is going up every, year, look at the insurance portion, because a lot of times, a lot of people are seeing 30, 40, 50% rate increase just because the cost to rebuild your home maybe 2 years ago has increased. So let's say it cost you $300,000 2 years ago. Look at your policy; it could look at $400,000. That's where you're seeing a lot of the big increase.
I know you got questions. So.
No, keep
Fire
going.
a missile.
No.
Keep going. No,
Stay in my
you're
lane.
No, this is you go.
I don't know.
I
think it's interesting, but also one of the questions I have, which I think is so interesting, is like I've had people reach out when they're buying a home and they go to get the insurance, and the insurance is a little higher because there's already a claim from the past on that home from the previous owners, and that is affected. I mean, we've actually Sale failed. Your sale failed us because, like, hey, but I get excited because then I'm like, wait a minute, there was a flood in the basement. That wasn't on the seller's disclosures. And I'm like, liar, liar, pants on fire. You know what I mean? And I'm like, ooh, game on, let's go. But it's important that you can see that. So can we talk about how that affects like previous things and claims on the home? Because it could have happened 10 years ago, but it's in there.
And it feels like that's something new. Like, you're like sending drones out over houses.
I just was shocked also that you could see that a claim was I mean, you weren't the one that had the claim. You weren't the insurance company. But it goes into like this system so you know what happened in the house.
So what happens is, so for starters, if you currently own a home right now and you've had a claim on your own home that you've owned for the last like 5-10 years, but let's say 3 years ago you had a home claim. If you go to buy a new home, that claim sticks with you. Even though it happened at your prior location, a lot of times that claim follows you. So that's hard for
follows
the
person,
not follows the person. Yes,
but it follows the house too.
It also does. There's some companies, not all. There's some companies right now. A lot of companies are trying to tighten up. So how you tighten up is you underwrite a little bit stricter. So it used to be where if someone had like a water claim, no issue. Like, hey, you know what? It wasn't the new homeowner. We're just going to let that go. We'll keep in mind that it had a claim, but it's not a big deal. Now insurance companies, if there's one water claim, they're going to ask why. So why was there a claim? What happened? Did it get fixed? Because a lot of the time, it doesn't get fixed. Either nothing gets paid out or it doesn't get fixed properly, and then you see that claim happen more and more and more. And so I think that's the most difficult part is insurance companies are like, man, we can't keep having water claims and the claim itself is not being fixed. And so there was an example that I'm going through right now where someone was purchasing a home. That home had a water claim. There was nothing paid out. It was just basically left alone. The insurance company asked, like, okay, what happened? Can we get an appraisal report? So you get it back, and then on one of the pictures, it's like, oh, shoot, there's a water leak in this area, and it wasn't fixed. So a lot of the times, I kind of reach out to realtors like Heather and say, hey, if you have a client that's looking at a home, all you have to do is just kind of let me kind of quote it before to, one, give you worst case scenario on what the premium would be, and secondly, is if the home has any claims. Because let's say you're buying a home and you get a quote and all of a sudden they had a $20,000 water loss. Well, you want to make sure that $20,000 water loss was fixed properly, or at least you have some details of what happens. Because if you buy that house and it wasn't fixed properly, or you had no idea and you have stemming issues from that, then you're going to have to go through your own insurance. It's going to be kind of a disaster for you.
Why would one file a claim but not fix it and it not get paid out?
Yeah, like, so sometimes it's just
screws you over.
So sometimes so
like you're filing a claim and then you don't even get paid back.
So
for
more
it.
than not, it does get fixed, but sometimes there's shoddy work that's done or something that there's more issues, and so there's a lot of time where people go in there and like, oh, it's just there was a leak. Let's just fix the flooring. But when you look in depth to it, maybe some could have gotten the foundation or something could have gotten to the internal walls. So it all just depends on who's coming out and working on your house and making it, fixing that issue. Yeah. Like I said, a lot of times they get fixed, but for the most part, you'll see it. Like there was 2 years ago, there was a house that I was quoting. It had a $250,000 water loss. And then the next year it had a $100,000 water loss. Ooh. And so again, sometimes it's just, like I said, the easiest thing I always tell people, if you're looking at buying a new home, always take in considerate of like, has the plumbing been updated? Has the electrical? All those little things, even if you're paying an additional amount to have like newer, plumbing and wiring, it's worth it because you don't have to deal with the headaches of doing that after you close on your home.
The claim history is really big for Heather too, because when we get you guys into contract, you have that inspection period, right? Yep. This is when that's like, show me the Carfax, and you're looking at all these things. The more information like this, the more ammo or ammunition Heather has to negotiate and make sure that property's like totally up to snuff.
There's just and I think the other hardest part is like it affects how you get coverage. So a lot of times when we get leads from lenders or realtors and we're working on quotes, and for the most part, we try to offer every endorsement that they have because I think it's always fair to offer every endorsement to the client so they have the option whether to say yes or no. So what happens is if a client wants really good coverage on their home and then we send in the binder to the lender, and if they don't get that right, they'll say, oh, shoot, this is too much. This is not going to work. So that's why it's always good to do it weeks ahead of time, because if you do that same scenario with like USA or Geico and it's at the last 2 days and your lender comes to you and says, hey, like this doesn't work, you have 2 days to fix it versus multiple weeks to get that fixed.
Well, but also, I always like working with you because you're so quick about it and doing it during our inspection period and having it done because
Right.
that's
Yeah.
when we have this contingency. You
Yeah.
know, we're in a safe zone. So if something pops up with the
Yeah.
insurance, with the premiums,
100%.
with the history
Yeah.
that is not disclosed to us properly,
Yeah.
then we have that, you know,
Yeah.
to go. Story time, because
Yeah.
we did have a sale fail. You were doing an insurance premium
Yep.
for a home that we were representing the buyer, and there was a fire. And we knew about the fire. They
Yep.
fixed it.
Yep.
But you came back to us and said, "Oh, poop! Like, we
Yeah.
can't give insurance."
Yeah.
And there was a couple different reasons.
Yeah.
But there was renters in the house, and there was two different renters, and there was two different there was lots. Can you explain
Yeah.
it? There was like 3 different claims on the house or something
Yeah, so
by
there's
different
just
people.
so it's just multiple claims. So like again, sometimes those claims stay with the home.
Big
And so
claims.
big claims, yeah. So
Yeah.
they had a pretty huge fire claim that they had no idea about. And then what happens is when you know those claims going into your appraisal or inspection or whatever the case may be, when you're looking at the house, kind of like what happens, like, oh shoot, I can kind of see where that fire was and how big it was. And what happens is it just limits your options because again, insurance companies right now, they're tightening, they're not loosening. So if you're going into a home and it already has a claim or two, you're probably dropping so many options for you to get insurance from the get-go. That has nothing to do with you, just the home itself. And it's just again, it's the hard part where the insurance companies are they're not making any money on homeowner policies, and so they're doing their best to try
Right.
to make sure the clients that they do have, because there's companies that we have and there's companies out there that are turning away new business. So if you've been with a company for 5 years and you go and buy a new home, they may not write it just because that's how tight their book is. Even though you've been with said company for 5 years, all you're doing is you're buying a new home. You hadn't had a claim on your old one, but just because they're tightening you, they may say, no, we're not going to write it. And that's just the nature of the industry right now. It's tough, but I think there's light at the end of the tunnel. But the incident with the client that we had together, it sucks because they look at this house and like, man, this is an awesome house.
Fall in love
They
with it.
find that stuff out. But at the end of the day, they probably made the best decision just
Right.
because they're not going to have to deal with any of those issues down the road. That's going
Those
to cost them
claims
money.
were still open,
Yeah.
which was
Yeah.
odd and weird. But his premium was going to be so
Oh,
high.
expensive.
It was just not
It just
affordable.
wasn't worth it. Yeah. I mean, if we're talking about, do you want to pay $5,000 versus, let's say you go look at a different home you fall in love with, that's going to be $1,000. And that's every single year. It's not like a one and done thing. That's going to be on there. And home claims stay on there for a long time.
Well, in that particular,
there he goes.
that particular
Yeah.
scenario,
Yeah.
where the conversation went from my perspective as the lender and
Yeah.
the go-to on the money, it's like, okay, if you bought this home and you did pay annually this much more, would you rather have this house that's
Yeah.
$30,000 more in budget? And it opens up a different perspective. It's
Yeah.
like, oh, well, if I were to really have the same payment as this, but a higher sales point, maybe the systems are updated. I'm not going to have a slanted driveway that is susceptible to flooding or different stuff. So there's a lot to it. I really hope that the people watching are grasping.
I hope they do the too. But
Yeah.
here's the other thing: with that premium being so much higher, that added not just having an average, let's say your average payment for insurance
Yeah.
in your monthly payments, $100 towards your mortgage payment that is included for your insurance.
Yeah.
But now we're looking at 150 to 200, and that can affect your loan approval because now you don't qualify for that extra $200 a month payment. You only qualified for 100 extra for insurance. Does that make sense?
Yeah, well, and to add to that, Tyler and I talk about other people that he's supported who do the same role as me.
Yeah.
And things that lenders do that really press the environment and frustrate insurance people like Tyler is they'll pre-approve you assuming that the stars align and the premium is super low, and they actually give you an inflated pre-approval letter. So a lot of the times you'll have a shopper that's going out there, and in all reality, they might be looking for a home that they can't qualify for. And then you get into contract. Then they call Tyler. It's like, I need you to do magic with this insurance to make it work. I'm not joking.
Yeah, it happens.
I've learned over hundreds and hundreds of transactions to explain to the client, look, this is probably the realistic ballpark.
Yep.
Be prepared for that and leave a little wiggle room on the payments so that if it's slightly higher or you choose, say, a different policy or deductible to increase that amount and save the out of pocket, we can still get you the loan. And I'm not making things up. There's like most of the time the agents won't be honest with the selling agent of why they're terminating, but behind the curtain, a lot of it is the borrower just doesn't qualify for it.
Yeah.
It legitimately happens, especially in high interest rate markets.
Yeah.
I wanted to hear from you. What are what are the most expensive areas in the country to insure? Because I've helped a lot. We've helped a lot of people from Colorado who have really high insurance premiums, and they come here, and we're like a safe haven.
Yep.
Yeah.
Holy crap! California's another example.
Florida.
Yeah.
High, what is it called? Like natural disaster zones.
Yeah.
So can you give us some, like, because
Montana's another one. Yeah.
people are coming from everywhere.
Yeah.
So how are we relative to the different areas, and what are the higher areas?
I would just say if you see a lot of, it all has to do with weather, right, or natural disasters. So if you're in a place where there's flood, earthquakes, tsunamis, hurricanes, and all that, it's probably going to be more on the
Florida,
expensive side. So
New
Florida,
Orleans.
California, New Orleans. The saddest part is you have big companies, so national big brand companies pulling out of states like Louisiana and California.
Oh, really?
Just flat out, just like we're not going to write business there anymore. And you ask people from Florida who moved to here, it's really hard to insure
insurance.
people in Florida. It's really, and if you do get insurance, it's expensive. Same thing in California.
Weren't you
It's
the one
really
telling
hard.
me about your friend in Florida?
Yeah, we
Yeah.
actually have a buyer. She lives in Florida 6 months out of the year, in
Yeah.
Oregon here 6 months out of the year. And hurricanes, I mean, her insurance
Yeah.
is $10,000 a year.
Yeah.
So yeah, it's
Which
And
insane.
it's and so it's just it's hard. You go to like places like Montana or Colorado, it can be a lot of like hailstorms are really big. So it's just anything like that that's just causing an enormous amount of claims. Even here in Oregon. So obviously the wildfires is the one every year everyone always talks about.
True.
But it's also now we're starting to see these ice storms and windstorms. The last couple of years, the ice and the windstorms have been
That hail.
awful. Yeah, that
Oh
have
my
been
gosh.
awful.
Well,
And so
when you
it's
talk
just-
about
yeah.
here in Oregon and like Southwest Washington, our ice storms are big, and I mean
Yeah.
we're talking inches and inches
Oh,
of
yeah.
ice piled up on these trees, and
Yeah.
then the trees fall
Yes.
on houses
Yeah.
and the branches, and
Yeah.
the trees are falling on the cars. So then you're really screwed. Not only
that's
did it
the-
hit
yeah.
your car, and now you have the car insurance, but you got the property insurance. It's a
And
hot
that's the
mess.
hardest part is like people like when we have these ice storms or windstorms and let's say their neighbor has a big tree, but the tree never falls on the neighbor's house, it falls on your own house. Well, your insurance still technically, it doesn't go to the neighbor's insurance. It's your claim that you'd have to file to get that fixed.
So how is Oregon relative to?
I mean, it's probably in
Average?
the average. It's probably like in the average still, but it's not, I wouldn't say it's in the top 10 of the highest, but it's probably right in the middle.
I guess though our people probably it's much lower
Oh,
because
much
most people
lower.
are coming here for a lower cost of living.
Yep, exactly.
Oh,
So
yeah.
they are coming
Yeah.
from
Yeah.
these high cost areas.
Yeah.
When we get one of our ice storms, did you get an upset tummy?
As
As an insurance agent, are you like, oh?
Well, it's just tough because I think people are starting to get a little bit smarter on not necessarily the home portion, but the auto, like not driving all the time, being really careful about that. But yeah, it's nerve wracking, especially like during wildfire seasons.
Yeah.
Like if we have clients that are in that area, my heart always goes, man, I hope nothing happens.
Yeah.
But the good part about I work with my wife, what my wife and I do when we're insuring our clients, where we don't have these heartaches or where we don't have like this pit in our stomachs when these things happen, is just making sure that they are insured properly, because you can't stop what's going to happen already. But as long as they're insured properly, that's all they care about. We were driving back from Bend and going towards what's that lake? That's
Detroit
right there?
Lake.
Detroit Lake. And if you're not in Oregon, it's a beautiful
Yeah.
place. Bend's a beautiful place. But that drive from like, let's say Portland to Beaverton to Bend, and you're going through Detroit, it's really beautiful. But when you drive now, you see what the fires have done
The
within the
aftermath,
area.
that was
And you
terrible.
look, and before you had all these like older homes that have been there for years and years. Now you drive through, they're all new. I know you take that drive a lot. They're all new homes.
Yeah.
And it's because they were burned completely to the ground. And the biggest thing, and I know you guys work with clients from California, when we are dealing with clients from California that are moving here to Oregon, they always ask, like, I need to make sure the extended dwelling replacement cost is 100%, because they can name 1 or 2 people where they started building their home and they get halfway through and they ran out of money. And it happens not like every once in a while, it happens a lot.
Yeah.
So it's one of those things. It's like trying to figure out ways to, help with wildfires and stuff. Insurance companies are trying to figure it out. But it's something because of climate. It's just, I don't know. They're just trying to adjust and make sure that everything's okay. It's tough.
Yeah, in all seriousness, this is one of the reasons why we work with Tyler. Because everyone has seen the commercials, and you can get a quote that might seem cheaper, but it might be crap.
Yeah.
And it might not actually cover you.
It doesn't happen.
And that's what we love about Tyler.
And you take the time to make sure not only did the buyers understand it, but if they still have questions and they come to us, like, you take the time to talk with us, so we're all on the same page and they're making the right choice when they're getting a house. Okay, so I want to bring up something with insurances, and I feel like we need the music of the dun dun dun,
Dun, dun, dun.
Dun, dun, dun.
like scary music.
What
You
is
need to have like a little soundboard.
I know, we need a soundboard. This is scary stuff, because I feel like this is a hot topic.
Yeah.
It affected us, but on many different levels everywhere.
Yeah.
That affects insurance. Do you know what I'm going to say?
Roof?
Yes,
Yes.
roofs. That's where we dun dun dun.
Yeah, dun, dun, dun.
Roofs.
Yes.
Like, roofs are like all kinds of roofs, but let's talk about that, because like how old the roof is and
Yeah.
how it's
Oh, of
affecting
course.
insurance, and then we
Yes.
can talk about our story time.
Yeah. So again, I think the theme has been insurance companies are tightening it up. And so one of the things is with roofs. So again, a couple of years ago, 5-10 years ago, you could have, a roof that may be older than 15 years old. They don't prefer it, but it's not like they're not going to write you. They may surcharge you, but there's maybe a cutoff at 20 or 25 years. Insurance companies are looking like they can't have roofs older than 15. There's some that will still do it, but again, we're talking about that part where they're going to surcharge you a lot more for
They're
it.
sending like drone video, like taking drones and flying them over roofs to look at them.
Yeah, I mean, and that's the thing is the hardest part is when an inspector goes out of the house, they'll say, this roof has 5 to 10 years old left on it. And so the client's always like, oh, my roof's fine. The guy said I had 5 to 10 years left. But insurance companies don't go off of what the inspector says. It's strictly just how old the roof is. So even if it could still be in decent shape, sometimes they may go, oh, yeah, that's fine. But more than not, it's like that still has to be replaced just based off the claims that they've seen. And so we've had clients who've I've looked and I'm like, man, that roof is it looks great, but it's 20 years old and they still won't do it.
How do they know how old it is?
It all depends. I mean, I always ask. I try, that's the thing is that's when I'm inputting information, that's the question is, how old's the roof? So I always ask, hey, when was the roof been updated? And a lot of time people will either have a small bar park or, oh, the guy said it was replaced, within the last 5 years. We don't need
Is that
an
on the
actual date.
listing details?
If it's a newer roof, absolutely, that's a selling point. Like,
Right.
people are like, oh, the roof was replaced in 2020.
Which is huge. It's kind of like when you're buying a car and you're like, hey, my tires were replaced 2 years ago. You're like, oh, perfect, sweet.
Yeah.
Or a year ago or 6 months.
Good analogy.
Yeah.
Tires.
So here was something interesting, story time on one of our transactions. So on the listing, it's a 40-year shake.
Guaranteed.
Cedar, guaranteed 40 years, cedar shake.
Which I don't
roof.
even know you can guarantee that. But
I know. But it's 20 years old.
Yep.
Cedar shake, beautifully, well maintained. I mean, this little seller, sweetest
was a
little
good
old
roof.
lady, it was just, meticulously cared for.
Yep.
And still had 20 years on it. My sweet little buyers were like, yes, I've got another 20 years.
Yep.
And then I get a phone call from them about a cedar shake roof. Cedar shake roofs are not really all that common here. There used to be some HOAs that required them, but now that they've kind of phased those out and people are going more comp type roofs, so they're not as common. So they call me up and they're like, your insurance guy Tyler said it's going to cost me $5,000 for insurance. And I'm like, what? They're like, yeah, because of the cedar shake and we can't get insurance. What do you do? What kind of problems do you run into? So I'm like calling up Tyler like, what the heck?
Yeah.
So let's talk about that because this is important.
Yeah, and that's the good part about different companies. And so the best thing about an agent, this is like State Farm, all State Farmers, even independent agents like myself, having a lot of different people that you know that can take on some of that stuff. So it was my old colleague Tucker that I worked out with at Payne West. He now owns a State Farm agency in Washington, and State Farm was able to do it, which was great, which was awesome. It was still high, but it was a lot less than what the companies that we provided. But a lot of the companies that we provide is what you kind of see out in the market anyways. But that's the hard part, is that you just limit your options. So if you're moving from Washington to Oregon, or even, Portland to Beaverton, and you had your auto insurance with, let's say, like USA for 10 years, you have all your policies there, and then you look to buy this home that you're talking about, and all of a sudden State Farm is the only one that could write it. It's like, yes, I'm so happy that State Farm can, but then you're almost like, oh shoot, I should probably put my autos there, and then you don't know if the auto rates are going to be good. So you kind of almost like stronghold. Same situation I'm going with someone right now with flood insurance. So this gal's buying a home in Vernonia, and flood insurance is very expensive. Well, she found out that you can. Yep.
We never let people buy in Vernonia.
But
We don't
because of
still pay. No, we just
it's so
we
like
just
to
inform
give
people if you're in a flood zone.
Yeah.
I've chalked up so many mortgages in that town, and it's a
There's a
flood
reason
zone.
why that house is
Good for people to know. It's
Yeah.
just west of North Plains,
Yes,
west of Beaverton, toward the beach.
Yes, yeah. And so they were able to have the prior homeowners transfer the homeowner's policy. So instead of it being like $3,000, it's going to be like $657, which is awesome.
Yeah.
But this is the nature of our business, which is the sad part, is you always want to do what's best for the client, and not everyone thinks that way. But she was like, yeah, it's $657, but in order to go with this flood claim or flood quote, you have to do everything else with us too. So you have to do home, auto, and umbrella, which technically it's not a have to, it's just that's what they would like.
Yeah.
Which is sad, because at the end of the day, it should be like, you know what, we can transfer this one, you help the client out, they're not having to pay an arm and a leg for flood, but instead you stronghold them to be like, oh shoot, I have to move everything too, I can't just get the flood, no, you have to get everything too. So we're at a point where it's just like, we're putting clients in kind of difficult situations, and you never want to do that. And so, like for us, we have companies that will only do the home if you do the auto. So if I know I'm not going to get the client to do the auto, I try to just find a company who will do home only, instead of being like, oh shoot, if you do this company, the only way you can get this cheap home policy is to do this auto. And then the client's kind of like, But for the most part, people just need options, is at the end of the day is what needs to be happening right now.
Well, yeah, options is good. And I
Yeah.
appreciate you, because back to the little cedar
Yeah.
shake roof, what is interesting is, I mean, you called 8, 9
Yes,
different
yes.
very large insurance companies. Wouldn't insure.
Yep.
We're like, hey, we still have 20 years. This is a great roof.
Yeah.
And it's because of fires.
Yep.
We don't have a lot of fires here in the Portland metro area. I mean,
Yeah.
there are like, out in the
Yes.
gorge, but
Just happens.
California has a lot of wildfires. There's a lot of houses. You're not going to have a cedar shake roof in California because
Yeah.
it's going to catch on fire. And that's affected our insurance rates here. But it was like, oh my gosh, what are we going to do? Like, everybody's telling us we're going to have to replace this roof. And I'm like,
Yeah.
it was mine. I mean, this just happened. So
Yeah.
it was like super crazy. We were able to find somebody.
Yep.
But granted, they were also told, hey, next year we're going to come out and inspect this
Exactly.
roof and
Yeah.
be expecting to go ahead and you're going to have to replace this
Oh,
roof. Even
100%.
though you have 20 more years to get insurance, probably you have 1 year and we're going to ask you
Yeah.
to replace it. And I was
Right.
like, what?
Yeah.
That was insane. So,
So,
I went
yeah.
to work, and what did I do? I got a nice little credit from the seller.
Yeah.
And I felt really bad because the poor seller was like, what do you mean? This is a great roof.
Yeah.
I've taken such good care of it. And it was
Right.
really hard, and it was,
Yeah.
we got through it. There's always a solution. But yeah, we did get a credit for the roof to be replaced when the time comes in a year because
But it goes
Yeah.
back too, guys. Like I think we said this on a previous podcast. Right now in this market, all these things make a difference,
Yeah.
and you need to work with people that are willing to act in your best interest,
Yeah.
shoot you straight, not put you in a compromising financial situation, but negotiate on your behalf. And that's a reason why with this slower market, you're going to see a lot of these like onesie, twosie agents and lenders that might have got into the industry and now it's really hard and they can't survive are going to be gone because it's a lot of tough conversations right now. Just to close really quick.
yes.
Heather calls me and she's just like, man, it has just been a rough couple weeks. And it wasn't that bad results came out. It was so tiring each of these transactions
Oh, I
for
got my
us.
ass kicked.
Just so
was
many
crazy.
difficult conversations. And you're telling old ladies that their perfect roof isn't perfect. You're negotiating this, you're doing this, and it's all in the best interest. But right now, like, every dollar is a dollar, and it makes a big difference. So just a long-winded way of saying you got to be very particular on who you work with.
Who you work with that has your best interest, that's going to go to bat.
And not
it's
just
going
lay
back down.
over.
Yeah.
No, not just lay over. Because they were. I had the last several transactions that we've had in the last month.
Yeah.
Like, they were doozies. And they were really tough conversations.
Right.
But the roof being one of them, but that's why we always recommend Tyler's, because he's a good human. And even though he wasn't able to offer the best rate, he helped our people. He didn't get the deal. He did not
Yeah.
get the insurance for that, because he could have insured it for $5,000.
Yeah.
Right.
And he was able to get them a lower rate with somebody else that he trusted. And that's
Right.
just, I want to work with good humans, people
Exactly.
that, you know, really are taking care of our clients. And that's why you and I work together. We watch
Yeah.
out. Like, I have, you know, a client that now wants to move to Eugene. I love Eugene, but it's not my market. It's a little over 2 hours outside of the Portland market. You don't want an agent from Portland representing you in Eugene when that's not their market. It's a different market. You know what I mean? So you have to be able to work with people that have these relationships, that are a good human, to know when to stay in their lane, help people out.
Totally.
Yeah,
Especially in
100%.
this market.
And that's the thing is what I mean is I know Heather feels bad about it, but getting that credit is so huge, because there's a lot of times the insurance probably gets, you know, we deal with clients every single year. And so when it goes through Heather to Addison to myself, they're still probably talking to them. You know, we're golfing with one of your clients this week. But like for the most part, we hear from the clients a lot. And so what happens is that as soon as they're in the home, if there was something wrong with the home, we get the, oh shoot, I can't believe, why'd I buy this house? Now I had like this $40,000 water claim. I had a client who was dealing with an issue with the water right underneath his deck that got into his foundation, that he had, it was faulty, and he's like, if I would have knew this prior to getting the home, I wouldn't have bought this home. Thank God. And I told him, I was like, I don't know if no insurance company will cover this. We can make a claim. I'm not sure it's going to be covered. And this was like an expensive claim. So they went out there, and the insurance company was going to cover 85%, but he was so happy because he's like, it was godly expensive. But it's one of those things where it's just like, there's so many people sometimes when they're like, they press and they're trying to get into a home and they don't have the funds to fix anything, or if anything were to happen after the fact, it's, if you don't know like the plumbing or how old the plumbing is, if you don't know how old the electrical is, like kind of like the bones of your home, you're kind of almost gambling at that point, unless it's a brand new home. I always tell people, if it's a brand new home, your insurance premiums are going to be cheaper. They think that nothing's going to happen. There's no problems with the piping, electrical, so you're good. But if you're in that 1940s to 1970 home that's been remodeled, a lot of times it's not really nice on the outside, but like you pull those walls back, sometimes you're going to get like, oh shoot, it's not, no one touched the plumbing, the wiring, you have to update that, and that's something that a lot of people don't plan for.
Yeah.
You hear sometimes, I'm like, hey, do you plan on, you know, how old's the heating? Oh, it was, we don't know, but it's pretty old. Well, are you planning on like updating it in the next couple of years? Yeah, maybe it's not, so we're going to do some other things. So if something happens with the heating, it's like, that's something that a lot of people don't plan for. Same thing with plumbing, same thing with the electrical. It's something you never plan for in the event something happens, like, oh shoot, it's old, I have to replace that.
That's not fun stuff to
Yeah.
replace either. That's the non-sexy fun stuff.
Yeah,
Nobody
and they're
likes
big
to do that.
checks to write.
Yeah.
Well, and to kind of land the plane, what would be the number one piece of advice you would have for, homeowners?
Yes.
New, relocating, whatever.
Yeah, so
from
right now,
insurance?
the first thing I'd say, hug your current insurance agent, because I know you're getting your renewals and you're probably not happy with them. Or you're like, why is this so expensive? I promise they're not doing it on purpose. It's just the companies that they work for, they represent, they're struggling just as much. And so we just have to get on track of being responsible. Always have conversations with your agents. I always tell every single one of my clients, call me, let's chat about the claim before you submit this. Let's see if it's a good idea whether or not to do that.
Do the math.
A lot of times, and it's even it can be car insurance, homeowners insurance. Always chat with your agent. And that's why, again, I'm not kind of biased. I think there's a lot of good companies out there, but I always tend to like the ones that have an actual agent. So whether it's an independent agent or an Allstate agent or farmer, always have someone to talk to, so that way you could say, hey, is this a good idea to submit this claim?
Not just
And
a
you
1-800
yes.
number.
Yeah, instead of just like, oh shoot, I there's some water, I just have to submit this, and you're supposed to. Can tell you how many times, especially renters. So if you're renting a home, please don't do this. So you have a renter's policy, you pay $100 to $200 a year. Someone breaks into your house, they steal $800 worth of stuff. You have a $500 deductible. People pay make their deductible to get that all replaced. 2 years from now, you go and buy a home. Again, that follows you. So instead of the homeowner premium being like $700, now your homeowner premium is $900 to $1,000, all because of that small little claim. And so, like I said, always try, at least my biggest advice is always to have someone that you could chat with that's going to have those type of conversations. And then the second thing is just check your policies. Give you an idea. We write with a company called Travelers, and Travelers Insurance also works with Geico. This is probably groundbreaking if you don't know this. Geico does not have their own homeowners. They go through Travelers for their homeowners and policy. So the hard part is there's so many different options and coverages. So if you went out and got an insurance quote from an independent agent and a Geico agent, you're probably going to get both Travelers, and they're probably going to look very different. So just always make sure you know. You don't have to be. I always tell people you don't have to be an expert in insurance, but you should at least know what you're buying. It's one of the biggest things that people buy every year, but they don't have anything to hold. It's really the stuff that they see on paper. They're like, oh well, I'm good if a fire happens, but those aren't the everyday claims. I can't tell you anyone personally outside of the clients I work with that I know who's had a fire loss. I'm not sure if you guys know anyone who's had a fire. It's very minimal. But I could tell you there's a lot of people I know who's had theft claims, water claims, utility lines claims, all these little things that a lot of people don't have coverages for. So again, just have, anytime you're getting a quote, whether it's from your new home or old, tell your agent, offer me all the coverages, because at the end of the day, you could always say no to them. So just say, hey, price is important, but also coverages too. So please add all the endorsements, give me the highest package coverage, and then I'll work my way down. Because working your way from the bottom up, again, not a lot of people are experts on insurance, so they're going to look and be like, this looks good, $700 looks great. And they make a claim, and it's not covered, or it's not covered how they want to, and they're like, oh, so why did I pay $700 for? Right. And it's what the industry has made it out to be is that every insurance company is the same, and not every insurance company offers the same endorsements and coverages. And so again, just ask your agent to say, add all the endorsements, add all the coverages, and then explain to me what these are, and then we could go from there if we want them or not. And then I think you're going to be good from that standpoint.
I love it.
Yeah.
I love it.
Yeah.
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 Very, 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 very important stuff.
You wrote lots of notes, my friend.
I did.
Yeah.
We covered it all. There was some stuff I personally wanted to write down. But this is a big deal. And it goes back to why we are the #1 relocation team here in the Portland Metro and Southwest Washington. One-stop shop. We work with people that work just like us. We trust them. We use them personally. This is a big piece, guys. So if you're even thinking about relocating to the Portland Metro area, Southwest Washington, of course, we got to add in. We got to hear from you folks. So we're constantly setting up Zoom calls and consults. Heather and I, we do these twice a week. Love meeting people from all over the country. Want to hear about when you're visiting, how you're coming, and let us be your team, right?
Let's do it. Let's come up with a game plan to help you with a smooth transition from whatever state you're coming from.
Yeah. Oh, last thing before you guys go.
Oh, we got a bonus.
I just thought of this just because this is I say this almost every time, my biggest pet peeve. You do not save money when you switch your auto or your insurance policies every single year. So stay with a company for at least 3 to 4 or 5 years. That's the sweet spot. That's where you're seeing your savings go down. The biggest thing is people switch every single year, and
your profile shows you as a switcher.
Yeah. And so think of it like, I know you guys are really big on credit and making sure that credit is good. Insurance has an insurance score. So they look at how often you move companies, how often you pay your bill, what your coverages are like, all those things. You have an insurance score. So if you are someone who switches every single year, you may save $5, you may save $10, but you're constantly going up and up every year. There's clients who have been with State Farm for 10 years. They pay $200. They shop after 10 years. It goes from $200 a month all the way down to $90 a month. There's people who've been with Geico for 6 years, state minimums, worst limits you can get. But what's helped them is that they've been with someone for so long, so they pay $140 a month. They shop, it drops down to $100 a month. Happens all the time.
Because of loyalty.
Yes, yeah. So I know I know you're getting your renewal and you're like, man, I'm up $10 a month. This is horrible. Just hang on, because sometimes it's not worth switching for.
Just don't go get coffee that day, you guys.
Yes,
Just save.
yes, exactly. That's the little bonus nugget.
Oh, that's huge. I love that.
I know.
Yep.
That's very good nugget.
Yep.
All right. Any other nuggets to add
No,
there?
I hope you guys enjoyed this one, because I mean, insurance is really a big deal, and it's really played a big part in a lot of our transactions.
Yeah.
Especially lately with the market. So
It's
we wanted
huge.
to do it. Tyler, thank you for coming.
No problem. Thank you guys. Thank you guys. Thank
I know.
you.
All right,
Awesome.
that's a wrap, everyone.
Until next time, we will check you later.
See ya.